Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, market recognizing higher likelihood of platinum deficit than surplus in years ahead. Pan-African well-positioned as solid margin extended life gold producer, and mining boom papering over serious structural issues. The World Platinum Investment Council said right now the market is recognizing the higher likelihood of platinum being in deficit rather than in surplus in the midterm years ahead.
Yes, I think the market has assumed because of this chip shortage there'll be much less demand for platinum, and then the suggestion is there'd be a higher surplus. So we published most recently a surplus for the platinum market in 2021 of about 190,000 ounces. So in my argument of maybe 28,000, that adds another 88,000. So instead of a surplus of 190, we have a surplus of 280. And that in itself certainly doesn't warrant massive price reduction or huge negative sentiment. And what we do know is that the opposite thing happening is that we do have a lot of substitution of platinum for palladium, and certainly supply remains fairly constrained. So we think that swing is, yes, material and yes, of a concern, but certainly shouldn't be harming sentiment that it has.
Pan-African has had an outstanding 2021 financial year to June 30. Profit rose to 68% to a record of close to $75 million, and a record dividend declaration has been recommended.
From a production perspective, it was also our second best year in terms of production. What it certainly has assisted us in recent years is Elikhulu, which is our low-cost tailings retreatment operation at Evander. So, the contribution to that plant helps us to also reduce our all-in sustaining costs of production. So I think in terms of the overall cost of production, it was also a good result. So yes, overall it was a good year, and production guidance was initially 190,000 ounces. We then upped it to 195,000 ounces, and ultimately we delivered over 200,000 ounces. Our guidance for the year ahead is a minimum of 195,000 ounces. So pretty much very similar to what we did in FY21. So yes, that means assuming the gold price remains cooperative, that we'll again have a great year from a financial perspective.
South Africa's current mining boom is papering over some very serious structural issues that underline the mining industry as a whole.
At the moment, obviously, as your listeners would know, the mining sector has been experiencing a bit of a boom given the elevated commodity prices. So it's really one of those cycles which has benefited not only South African mining, but SA Inc. as well. But, and it's a big but, this is actually papering over some very serious structural issues which underlie the industry as a whole. Chief amongst those is the slowdown, or if not disappearance, of investment in future capacity. This is a trend that we've been seeing for the past 10 years in terms of mine expansions and exploration. South Africa has definitely been on a downward trend. Add to that, despite the quality and the output of product that comes out of South Africa, we do have infrastructure challenges. From a logistics perspective, a number of players within mining are struggling to get product to market as efficiently as we possibly can. Bearing in mind that we sit on the southern tip of Africa, we may be able to compete in terms of all-in sustaining costs at the operations, but we still have a logistics challenge, and to the extent that we don't look for efficiencies within that particular chain becomes a disadvantage for the sector as a whole. The other issue really, which I would place in my top three detractors for a mining boon for South Africa, particularly going into the next 10, 15 years, is the subsistence of the policy uncertainty. Yes, there have been improvements in recent years. We don't have as fractious a relationship as previous policymakers have had with the mining sector, but we're still not where we are. Add to that the capacity constraints which are built in to our statutory and government bodies that ultimately still have to implement this policy. And, we do have quite a few things that we should be working on as government and as the mining sector as a whole.
For mining news as it breaks, stay logged on to mineweekly.com and register for our free daily newsletter.